So traders, what I want to do today in today's video is I want to just walk you through the markets, but I want to be walking you through the markets in a way of how to actually, what sort of techniques do I use? What sort of strategies do I use when I'm looking at these charts to give me a good understanding of how to read the market properly, how to get a good understanding. And I want to show you the techniques, not just me giving you an update, but me actually teach you the techniques to becoming a really good trader, so you can start to get a good understanding of how to read these charts properly, so you can make much better informed decisions. Let's get straight into it. Don't place a trade based on what you'll see in this video, because there is no guarantees of making a profit in the market. It takes you a long time to become a good trader. So this video here is just to educate you to become a much better trader. Alrighty traders, so happy weekend to everybody. So before I do start with today's video, guys, one thing I actually want to share with you, a bit of a thing that I'm noticing across the markets. I honestly, truly believe, and again, as I'm bringing up these charts, I'm going to do a bit of a thing here, and I want to leave your comment below and let me know what you think about this. I honestly believe the future is going to look bright. The future is going to look amazing. In the short term, over the next, say, the rest of this decade, over the next 10 years, we're going to go through some really big pain. But I honestly believe on the other side of this, I really see there's an amazing bright future for our kids and the future generations to come. I honestly believe that the whole thing about taxes, this whole thing about big tax and tax and tax and tax, all this sort of stuff, right? The taxes and all this sort of stuff that's happening that really weighs people down. The thing is, like, people were having to work jobs they hate. The low income, the taxes and all this sort of stuff. I honestly do believe that once this AI thing really kicks into play, right? If you guys have read the book AI 2041, this book right here, right? So this is called AI 2041. And the really big thing that I learned from this here is it's such an amazing book. And you see this whole thing coming out, right? So this is where, like, it's just sort of like this. Our future is going to look nothing like what we've seen in the last 100 years, right? And the whole thing, I truly believe, is one of the hardest things for people out there is once all this comes into play over the next, say, 20 years, right? Over the next 20 years as these things unfolds, it's going to be people, as now people are going to start to like, what do I actually want to do with my life? If there's a universal base income, if there's pretty much no taxes because all the robots are taking care of it all, and like, I don't know. Anyway, I wanted to start off with this update here before I get into these charts here to teach you the tech analysis. For this weekend anyway, a bit of a thought. Let me know what you think about what I just said there below. I do believe in the next, say, 5 to 10 years, we're going to go through a big, massive destruction type thing, or massive reset type thing. But I believe the AI that's going to come into play, it's just like, anyway, I think I'm really excited about the future. Anyway, so let's actually get into these charts here. So let's actually start off with the Russell here. So the thing that I'm going to sort of start off with here and to teach you guys, whenever I'm looking at the market myself, okay, whenever I'm looking at any charts here, the very first thing I'm looking at is always what is the big picture on any market, and then I'm applying some simple trend analysis. Okay, so to me, always, if I there's a lot of moving averages on these charts here. Okay, so I'm going to remove the moving averages. This is always the very first thing, and the rule number one for me is always what is the trend in any market, right? Because there's two things. There's two things. All right, firstly, the highest probability trades to give you a really good win-loss ratio are going to be with the trend, right? And also the chances of jumping on a really big profit are going to be with the trend, right? So that's why rule number one is what's the trend. And so for me, whenever I'm reading the markets, especially when I'm actually looking for a trading opportunity, I'm always looking at the markets in a result of looking at the weekly charts. Okay, so this is the weekly chart here, okay? And I'm always looking at it and my thing in the back of my mind, I'm just saying, what's the trend? Is there a trend, right? Because sometimes there's no trends. And so if I look at this here, if I look at this chart here, say for example in the Russell, and I'm trying to see what's going on with this chart here, right? I'm gonna continue overlaying this. This is going to be like a bit of a masterclass for you to help you when reading the chart. So you can apply this analysis to any market, like and this analysis is sort of handful analysis I use. Is one, it's going to take the confusion out of the charts here, and two, it's going to allow you to start to make much better decisions in there, and even potentially see some really good opportunities come along your path. So looking at the Russell here, okay? So looking at the Russell and looking at what we're doing here, one of the big things I'm always looking for, I was like, okay, then on this weekly chart, to get a good understanding for me, I'm saying, what's the trend? And the next thing I'm saying is that, is there a trend or is there no trend, right? And so that just simply means this. If the market's in an upward trend, the most important part is a higher low, okay? So if the market starts to make these higher lows, now people say higher highs and higher lows, that is true, but the most important part is making higher lows, okay? Because what can happen sometimes, it'll come down, make a higher low, it'll then start to roll over to make a lower high, but then it makes another higher low, and then the trend continues, right? We have these higher lows through here. So this is what's called an upward trend. So the most important part to me is that if the market is starting to trend, is it making these higher lows, okay? Because again, sometimes you can get these lower high here, and that's not the most important part. The most important part is the lows through here, okay? So here's the thing. Here's what I'm saying. One thing that I'm seeing with this here, I'm always looking at that. So sometimes when I'm looking at, say, for example, the Russell here, okay? When I'm looking at the Russell, and this is not me to give you an update, but I'm just utilizing the techniques I'm using right now, whenever I'm looking at the markets here, okay? So when I'm looking at, say, the Russell as an example right now, the Russell, an example, I would say, okay, if I'm looking back over through here, we can see back through, basically through 2022, all the way through to the end of 2023, I can see what? So there's other three things that's happening here, right? We start to make these higher lows, which are in an upward trend. We start to make these lower highs, which are in a downward trend, or we can actually start to do this here, sideways action. So for me, to give me a high probability of having a successful trade in the markets, I'm always asking that thing: what's the trend? And is there a trend? And if there's no trend. And so if there is no trend in the markets, I don't want to be part of that, right? Because now it's like flip a coin, right? It's like flip a coin. Is it going to go up? Is it going to go down? I'm not sure. So when the market starts to do this here, no one is in control, right? Are the buyers in control? Are the sellers in control? Or is there no one in control, right? Now, say sellers in control for me is not the legs, right? Sellers is the overall trend. Are we making higher lows? Buyers in control. Are we making down here? Sellers in control. So when I start to look at these markets here, okay, and I start to see this here, and if I'm analyzing this on the perspective of looking at the Russell right now as it is, okay, and I'm not applying fundamental analysis and what I think, and the government and the Fed and this and that. It's like, let's just apply some simple analysis here to help me understand what's going on. So if I look at this, say, from a Russell perspective, I can see that, one, we did have these lows through here, but they're, right, this point through here, there was actually nothing going on, right? Nothing going on. There was no movement. There was nothing going on. And then guess what happened? The market started to pick up through here, right? Low, same low, higher low, same low, higher low, and now we're developing another higher low here. So on the weekly chart, we can see that doesn't matter. And this is one of the hardest things about, if you're a trader, you use technical analysis to make a decision. You don't use fundamentals. If you are trading the markets based off what you think the Fed is going to do, you are going to get run over, right? Run over. So the thing is this: if we see this market continue making these higher lows all through here, right, and we see the market here, the market is telling us that the buyers are starting to come in a lot more eager right now, right? We've been making, we weren't doing nothing for a few years, and now we're making low, high, low, high, low, high, low, high, low, high, low. So in the result of this here, of this point all through here, the thing that if I'm looking for trades, I'd want to be looking at trades that are more with the overall, with the overall trend, right? Because then as you can see, if I'm looking at that, the best trades have been what? For the last 12 months, the best trades have been here, 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 and potentially, look what's even happening soon, right? So and the reason why that's so powerful, what I just shared with you on the big picture, because if you look at this here, if you try to short it here, short it here, short it here, you see how the short, even shorting it through here, was a very, very, very risky thing. So the rule number one thing for me is, what is the trend on that higher time frame? So for me, I'm always looking at my daily charts for entries, okay? So the rule number one thing for me is, what's that weekly trade? What's that weekly trend doing? Are we in an upward trend? If so, then I only can look for bullish trades. And the reason why is because the bullish trades are not only going to, give me a high win-loss ratio because the overall trend is there, right? And most of the time the trend does continue. And then about 20% of the time it doesn't. Once we actually do that, right? Not only do we actually have a higher win-loss ratio in our trading, but then we also have the chances of jumping on a really big move. And you can see here, just over the last, say, 12 months, if you were trying to, if just by understanding that one simple concept, if you were trying to say short Russell all through these periods through here, you were getting run over, right? You were truly getting run over. So that's probably one of the very first things that I utilize whenever I'm looking at these markets from here. Now, here's another thing that I really utilize, and it's something that really helped me through all of this year. And I'm going to use the S&P 500 as an example here. And the reason why I'm going to bring the S&P 500 is because this really helped me stay calm and to see what's probably likely going to happen moving forward. Okay, and especially what happened this year when we had this big drop down through here. A lot of people were starting to get worried about, the recession starting and all that sort of stuff. And I was like, don't worry about it. It's not coming. Okay. And if you were around that point, you would know that I called for this point through here, right? That's probably the intraday thing there. So that we had that move down there. So what I want you to do is I want you to start to do this, okay? Put a 24 moving average. Put a 24 moving average on the weekly chart. So we're going back to the weekly chart again here, okay? And here's the thing. Whenever you put a 24 moving average on the charts, and we use it from the S&P point of view, right? We can use it from all these different points of view through here, okay? Nasdaq, but I'm going to go back to the S&P 500. Now, here's the thing, okay? So rule number one for me is trend analysis. As long as we're making higher lows, we're still in an upward trend, okay? And the reason why I say that is because a lot of people get this mixed up. If we come down and make a high low, and then we come down and make a high low, and if we come down again through here, and we might even come down a lot, as long as we stay above this last low here, the trend is still up, right? Because the trend, what does the trend do? The trend has these pullbacks, right? Pullbacks. So the rule number one is, if the market's coming down, and this here could be a 5, 6, 7, 10% drop. But as long as the market is still above this significant last low, there's a high probability of what? There's a high probability then we're going to do that again, right? And then do what? Low, higher low. Oh, there's another higher low. What's the trend? Etc., right? So that's the first thing I'm always looking for. The next thing I'm overlaying it with is I'm using a 24 moving average. And the reason why this is so powerful is because whenever the market is, say, pulling back, right? Pulling back simply means it's just going, the market went up and then it pulled back and it went up and it pulled back and it went up and it pulled back and, and we see this thing through here, right? Up, pull back, up, pull back. So whenever we do go through these periods in the markets of trend analysis, right? But then whenever we do go through these drops in the markets, which is, again, just the normal rhythm of how the markets work, right? Whenever we do that, whenever we start to see this thing happening here, I start to see it in a result of what is the moving average doing, okay? Because many times what will happen is you will see here, okay? Let's check this out. So you'll see this, see how the moving average has been pretty much strong to the upside this whole time? Well, what can happen is that if the market's coming down, but the moving average is still strong, we're probably going to get a bounce and continue. Especially if the trend analysis first, moving average second, right? And then look at this here, we're down. This is when, right here is when right there and right here is when the people freaking out, recession and so on and so forth. And I was very calm on YouTube to say, this is what we should be focusing on, is look at the market here. And look what happened. We end up picking back up, and then we had another smaller drop recently, but look, then we picked back up and put it to new highs. So as you can see, just by utilizing these two techniques in the markets, these are the two main techniques I'm looking at to see what's the big picture here, right? Because the daily chart can give you some shorter term movements, right? Oh, we had a big up day today. Or we had a big down day today. Or nothing happened today. So I'm always keeping an eye on that big picture here, right? The big picture, or that long-term chart, or the weekly chart for me, right? And the reason why is because that weekly chart is going to keep me in tune of what's really going on here and what could be coming. So I can get ready for that, right? And not be so sucked into the media and the hearsay and the talking heads and so on and so forth, so I can make really good decisions. So that's the very first, that's the sort of the first two things there. What's happening with the moving average, right? And you can see all through here, look at this here. Notice how the moving average was all strong through here. And look what happened. Every time we got a drop, strong moving average, sideways strong, drop down to a strong moving average. Then we actually look at this here. When we dropped down, but the moving average started flattening out, notice how that was the change point through there, right? And then we started to go down. Look at this here. Even on the downside, when the market starts to go down like that, at the moving average, but the market has a big rally up through here, and you're trying to go long here, but then the market drops, and you're like, oh, why did the market drop for? It's like, because the big picture is telling you that this is what markets do, right? If you don't understand the markets of the rhythm and the rhythm of it, you're gonna say, oh, look, the market was going up, but it was making a lower high here, so high, and then that was another lower high, but the moving average was likely to be dragging it all the way to the downside. Make sense? So that's what we are seeing in the markets, and then we start to pick back up from here. And we start to see this across all markets, right? Like even when I'm looking at the Dow Jones right now, and I'll take all this stuff off the screen here. But even when I'm looking at the Dow Jones right now, I'm utilizing the two techniques, right? The first thing I'm looking for is trend analysis. What's the trend? And then I'm noticing what? Lows, high lows. Remember I said before, the high lows are the most high lows, high lows, high lows. Okay, so the trend's up. So me trying to think the top's in is crazy, right? And one of the things to trading is we never know when the top's going to be in. The market will start to give us some warning signs. And what is that warning sign? We will start to break lows, right? We'll make a higher low, and then we'll start to break this low. So therefore, we're no longer making higher lows anymore. And I know that sounds really simple to make these low, high, low. And then we break. When we do that, that's when the trend starts to end. And until that happens, our thinking, our thoughts, our worries, our fears, our doubts, our hopes of a crash coming, all that sort of stuff is just crazy, right? And again, I'll just use the Dow as an example here, right? But look at this here. Remember I said before about breaking the lows, right? Up, down, higher, low, higher, low, higher, low, higher, low, higher, low. And look at this here. That was the first time right there. Right here was what? When we actually broke the low, right? We were making high lows all the way up, but then we stopped making high lows because now it's actually breaking a lower low. And then guess what? That was the point of then what? Of the start of the down move for a good, say, 12 months. And then we started to do what we're doing right now. Makes sense? So if you're sitting there worried, oh, the market's going to crash and so on and so forth, like you need to have a technical thing on the chart to tell you that that's actually happening. And the markets do speak to us. So that's why rule number one is so powerful. And so when I'm looking at the Dow Jones as an example right now, and I'm saying, okay, the trend is up, and then what's the moving average? The moving average is strong to the upside, right? Moving average is very strong to the upside. Okay, so we've got very strong trend, and now the moving average is very strong. We're in a very strong bull market for me. Okay, so that's the first two things that I do say when you're utilizing this. And probably the very last thing that I want to share with you in today's video is that even though what I shared with you just then is very, very powerful, one thing you must understand is how the markets work, right? The flow of market is stair-stepping. We never just go straight up. So what tends to happen is this. Let's just say, for example, that I'm going to use this green here, right? Let's just say, for example, that's the moving average. What tends to happen, even in a big bull market, is what? We'll move up, and we'll get pretty far away from the moving average, and then we might step back to it through here, right? And then we go up, right? We move it over through to here. Let's say that's the moving average, and we'll get pretty far away from it. We've already had up, and then we come down through here. So the last thing I want to share with you is that whenever we do, if we are strongly in an upward movement, beautiful. If the moving average is going up, beautiful. But if I'm looking to go long in the market, I never want to go long when it's already had a really big move up and it gets too far away from the moving average, because just like you see on this chart here, what tends to happen? We don't get too far away from it, right? We don't get too far away from it before we actually have a bit of a short-term drop or even a bit of sideways movement. So the number one thing I'm always looking for myself is when I'm looking at the markets, I'm trying to see where are we at right now. Okay, what's happening through here? And I can see the Dow Jones, to me, looks like the Dow Jones is probably the furthest it's been away from the moving average for quite some time now. So maybe, just maybe, when I'm looking at the actual daily charts over here now, this is the daily chart here, maybe, just maybe, we're going to start to get some sort of, potentially maybe a false breakout pattern going on here, maybe. Let me just do this here, right? So maybe a bit of a false breakout pattern too, and this 120 is like the 24 on the weekly charts, but we're getting pretty far away from it, right? We're getting pretty far away from it. So we could be getting a move to the upside, but the big thing for me is, once again, is where are we in the move of this thing here? So when I'm utilizing this, again, guys, this is all about probability, right? There's no certainty in the markets, but these things I'm overlaying here of, okay, should I be looking for longs or should I be looking for shorts? And then by utilizing that first two techniques, the trend analysis and moving average, and then we say, okay, cool. If I'm looking for longs right now, when is the wrong time to look for longs? And if we know through history the way these markets operate is what I just said there, that's when it can get really, really risky. And that's where, like, even for gold right now, one of the things I've been saying with my coaching clients, if you're interested in becoming a coaching client, that's the second link in the description. You can go fill out the application form. One of the things I've been saying with my coaching clients is that we're getting pretty far away from here. So even if we do go for another move to the upside, like here, like that, we get something like that going on. Look how far away we're getting from the moving average, and that just makes me nervous. I always like it when we get a pullback to the moving average. And then I'm looking for trades right here on that through there. So anyway, traders, hope this helped you out. Have an amazing weekend.